Good morning. Welcome to Almus Market Morning on this Thursday. It was quite an eventful day in US. Uh, Fed minutes got released at 12:30 a.m. IST, and it was more hawkish than feared. The central bank policymakers said a very tight job market and unabated inflation might require the Fed to raise rates sooner and begin reducing its overall asset holding as a second brake on the economy. Basically, it's something that the market was not expecting. Market has discounted taper by March and perhaps 2 to 3 rate hikes in 2022. But further reduction in balance sheet of Fed is something that the market was not expecting to come as soon as this year. So that actually led to stocks taking a big hit. Nasdaq fell by 3%, S&P by 1%. Dow, which was well into the positive territory, lost more than 1.5%. So, in fact, what they have given is that the increase in Fed funds rate should be sooner and at a faster pace than the participants earlier indicated. Some of them also noted it is appropriate to begin reducing the size of Federal Reserve's balance sheet relatively soon after beginning to raise federal funds rate. Since US is seen to be already at full employment. In fact, yesterday we had ADP private jobs report, which came much higher than expected at 8,07,000. The previous high was 8,22,000 in May 21. Although some people feel that this would have covered pre-Omicron period, mostly pre-Omicron period. But looking at other indicators, jobs market is very strong, and that has led, along with other sectors of the economy showing strength, led Fed to take a hawkish stance. Also because continued influence of the pandemic on supply chains, and then inflation to be kept on the higher plane should have triggered Fed to take such a stance. Dollar had weakened ahead of the minutes, but it gained back to trade above 96 again after the minutes when the stocks got sold off and risk-off sentiment took over. On the EM currencies, most of them weakened, but marginally. In Asia as well, there has been some marginal weakness. One would have expected some deeper reaction, but so far it has not. But I feel it will forthcome in the coming sessions, because rate hike, taper completion, and then balance sheet runoff. All these things will be something that the market doesn't like risk assets. Importantly, even one of the ECB members said that ECB is ready to act upon inflation by reducing bond purchases and maybe even a rate hike. He said rate hike may come as early as early 2023. There is also a report which says that one of the PBOC, the People's Bank of China, the central bank, backed newspaper, hints of a yuan depreciation in 2022. So overall, an atmosphere of risk-off sentiment and stronger dollar. Maybe we will not see dollar so strong against the euro and GBP, and even yen, because they have been the low yielders and their yields are also moving up. But definitely, wherever investors have sold low yielding currencies to buy high yielders, those can reverse a bit. On the INR, yesterday we saw a good selling from stock market related flows. Because stock markets had already taken a correction and New Year fund allocations, all those flows had brought down the dollar rupee. Although at 30, at 74.30, we again saw intervention from RBI. A host of nationalized banks and a few private sector banks were also buying on behalf of RBI. So 30 was generally supported. Obviously today, due to overnight influence, we are opening around 45 plus, and so 30 getting more durable support, we should eventually move higher and break up 74, 70. Might see it go to 75 as well. So interesting and slightly very uh, one can say volatile sessions ahead for us. We are also staring at uh, weekly jobless claims data, and more importantly, monthly jobs data for December from US tomorrow. All the best. Thank you.
Thanks, AK. So to begin with, Asian currencies are weaker today by 0.10% to 0.25% from previous close on hawkish 5 minutes. Korean won is almost touching 1200 and CNH is almost touching 6.38. Some couple of days back, CNH was trading at 6.34. So there's some buying happening of dollar against emerging market currencies also. Brent crude oil is facing resistance at $80 per barrel on account of increased stock inventory in US. Brent crude oil is an important factor for Indian trade deficit and Indian dollar rupee. So that's important factor we'll be tracking for some time. US 10-year yield closed higher than 1.70. So we have seen a continuous trading session where 10-year yields are moving higher and where the 2-year yield also moved higher than 0.80, which is 0.82. So there is some kind of range have been broken on the US yields and looks like we'll be heading towards 1.95 on a 10-year GSEC, on 10-year US Treasury by March 2020. Growth stocks have started taking beating in last couple of trading sessions, and this looks like purely on the increase in yields. We have seen a biggest daily drop in Nasdaq in last 11 months. Yesterday was a big move, and volatility index is almost touching 20. Once volatility index VIX close over 20 and start trading higher, there would be some sense of risk aversion will be there. We are seeing gold is trading in a range of $1,800 to $1,830. Any news which comes related to higher yields, it moves lower, but it's making a strong base around 1,800, 1790 to 1,800. Would be watchful whether it goes lower than that. As of now, there's not much trend. Crypto assets also fell sharply post FMC minutes. Bitcoin is trading at $43,000 per USD, which is almost 8% down from yesterday levels. And 10-year Indian GSEC yield now above 650. We will probably see by weekend, by Friday closing, about 6.55. That's all from me. Thank you. Have a nice day.